Hello and welcome to the Sowetan Dialogue in partnership with JSE Investor Services. I'm Alishia Seckam. Now, Black Economic Empowerment, or BEE share schemes, have been around for a number of years, right? The intention to give previously disadvantaged South Africans the opportunity to own a stake in a company and participate in its growth. The last time we sat down in this forum, we opened the door to interrogating what exactly they're all about, how one gains access, who can gain access, how one takes advantage of the opportunity they present, and explored a few of the pros and the cons as well. Today, we take that conversation a step further. Leveraging off last year's event, we're going to be focusing specifically on the benefits of investing and trading in BEE shares. We'll be hearing from one of South Africa's biggest BEE share scheme issuers, as well as a couple of other industry experts about the ins and outs of investing in this space in particular. But before we get into any conversation with our panel of guests joining us this morning, to more officially set the tone for this afternoon's conversation, I'd like to welcome to the podium Carol Crozier. She's CEO of JSE Investor Services.
Afternoon and a very good afternoon to everybody, and welcome to our audience as well as our panelists today. We are very proud to be offering this Sowetan Dialogue in association with JSE Investor Services. My name is Carol Crozier and I'm the CEO of JSE Investor Services and have been part of the group for almost 14 years. My role is ultimately to ensure that our shareholders and potential shareholders have access to investing into South African companies. Now, we do this by developing products and services which make our companies' lives easier by enabling effective engagement with their shareholders. We maintain the share registers of over 150 companies, including some of the top 40 JSE listed companies. What this is broken down into is over 2.5 million shareholders. Now, what does it mean to maintain a share register? Ultimately, what this means is that we update the share register off the back of buying and selling instructions on behalf of the issuer, and we make sure that the information on these shareholders is up to date and correct. Now, in amongst these types of offerings, we also offer shareholder analytics and managing and education of employee schemes as well as BE schemes, which is what we're really here to discuss today. When we talk about engagement with shareholders, we enable this in various methods and ways. Part of what we do is we operate an extremely effective call center where we are able to assist shareholders in all 11 official languages, and we have about 20,000 shareholders call through to us on a monthly basis. We also have a walk-in center where 15,000 shareholders come through to us and visit us annually so that we can assist them with buying and selling their shares. We have also adopted a really fantastic JSE product called ShareHub, which is ultimately a digitized mailbox. This provides for a centralized communication platform that shareholders are able to log into and access information that the issuers are distributing. They're able to update information and make sure that their contact details are up to date, which is extremely, extremely important. Register for AGMs, as well as access training and educational material around what it means to be a shareholder. Now, we are extremely excited. We've been working on a centralized BE verification platform off the back of the ShareHub product. And what this really engages and assists us with is creating a simplified BE verification process, which will ultimately enable trading within BE schemes. A broker will simply log on to the ShareHub platform and access the shareholders' verification. And if they are indeed verified, they will be able to initiate the trading process off the back of this. We're very, very excited about this product and watch this space. This should launch within the next couple of weeks. Now, as a subsidiary of the JSE, we are really aware of the important role we play within the economy and society as a whole. And as such, we are going to continue to take steps to create and implement a range of services to foster an inclusive, financially literate, and empowered South Africa. So I really thank you all for having me, and I hope that with the panelists, we can facilitate engaging and insightful dialogue. Thank you so much.
And thank you, Carol, so much for sharing that perspective and, of course, giving us all of that insight into how the JSE's coming to the party when it comes to upping the inclusivity agenda, right?
Thank you so much.
So, with all of that and the tones set, we're going to get into some conversation now, and I'd like to welcome today on the platform Craig Gradage. He's CEO of Gradage Mahura Investments, and then Langa Manqela, who's head of equity and equity derivatives at the JSE, and then joining us via Zoom from New York this morning, very early, is Michelle DeToy, Group Company Secretary at Sasol as well. So welcome to you all, and thanks so much for being with us this morning. Langa, I'm going to start off with you right at the top. Yes. What is investor appetite for BEE shares looking like in the current market environment?
Yeah, no, thank you very much to you and to your listeners. So the appetite, I would say, for the market cap of the BEE shares, which at the moment is standing at just under about 7 billion, is looking pretty good. On average, a year, BEE shares trade about 100 million, and we've seen that growing at about 30% year on year. So which means that from an appetite point of view, the end investors over the years have become accustomed to BEE shares. They now know, at least at a high level, the subscription process that you follow. I think also the market participants in the ecosystem have been quite pretty good at working with the issuers in popularizing the BEE schemes and making it easy for people to access.
Yeah. Craig, the Bulatsela scheme from Old Mutual is one of the latest to be triggering excitement. It starts to broaden up exposure to the financial space in particular. Is what Langa's highlighted in terms of activity and the take-up we're seeing on that front tallying?
Yeah, I think there's a clear difference between kind of secondary trading, which is what happens on the JSE and some of the other boards, and the excitement that tends to be created around an IPO. So there has been decent take-up so far on Old Mutual Bulatsela. It's a fairly small deal, so I expect it will be oversubscribed. And yeah, there is that excitement. I think Old Mutual, being a financial services business, there aren't any financial services broad-based BEE shares on offer, so it certainly adds to the mix. It helps investors diversify a bit more. It's a well-structured deal, so there's a lot of value baked in for people who want to participate. And I think they've been quite clever in terms of how they've structured the deal, and also by flagging that it will be biased towards the small investor. Okay. But I think, just the numbers, 100 million out of 7 billion, that's fairly low levels of trading, and it probably explains the big discounts that we see at the moment, with Sasol BE1, for example, Yebo Year 2, these shares are trading at fairly big discounts to what we would call fair value.
Yeah. Like I say, it adds to the list of what's already available, Langa. Before we take this conversation any further, let's do a quick recap here of what this particular investment universe is looking like. I know you highlight the market cap, but what BEE schemes are available for shareholders to invest in?
Yeah, definitely there's quite a number of them. So we have the Sasol one, we have the MTN one, Putumanati Vodacom, Yebo Year 2 is there. There is I'm just going to talk about the universe entirely, not necessarily what is only listed at the JSE. As to Craig's point, there are other boards that have these deals. We have the multi-choice deal that is out there. I think the key, the MTN one as well. Let me just bring that one in. I think the key thing from an exchange point of view is around the secondary trading that Craig has just touched on. How do we make sure that for end investor, it is easy to buy and sell, that there is liquidity, that the discount, that is the difference between the BE share price and the listed company narrows down, because that's important when it comes to an exit. These deals typically, they come out of with a certain restricted period, and at a certain time they need to be unwound, and capital needs to be fully repaid to those who financed it. So if you don't get that growth over time, it means that the scheme might be insolvent. I think that's the key challenge that needs to be solved. So it's a liquidity issue, but I would hasten just to add. I would hasten to say that it's important for BE investors to know that when you are investing in a BE scheme, you are taking a view, one, on the growth of the company itself from a share price point of view. You are also taking a view on the capacity of that company to generate cash for dividends, to pay down debt over time. Those things are very important.
Okay, so on the note of views then, Michelle, what's your sense of how these shares are viewed in the market? Do investors look at them in the same light as those that aren't BEE scheme related, and should they be?
Thank you, Alishia. I think initially there was a reluctance to buy the Sol BE1 share. But I believe over time, investors have actually started understanding the share. And I need to add here that Sasol, of course, has two schemes. We have a scheme which is not a scheme. We have a Sol BE1 ordinary share, which is a price, which is a share that investors buy full out. It's not a funded scheme. And then we also have the Sasol Khanyisa scheme, which has funding in the background. With the Sol BE ordinary share, we worked with the JSE many years ago to design the empowerment exchange and also the Sol BE1 share, and put the rules together at the time for trading on the JSE. We found initially that there was reluctance, but I'm very happy to say we have 6.3 million shares in issue at the moment, and we have seen just under 1,988 trades over the past year in Sol BE1 shares. This was a smallish number at 117,000 shares, but it does indicate that investors think there is value in the share. What is important about the Sol BE1 share, of course, is that as Craig mentioned, it is trading at a significant discount at the Sasol BE ordinary share, but carries exactly the same rights as the Sasol ordinary share, which means that we just recently paid the same 14.70 Rand dividend on a Sasol BE ordinary share that was paid on the Sasol ordinary share. So if you make your sums, you will find that the return on the Sasol BE ordinary share is significantly higher than the Sasol ordinary share. And I think that is what some investors are now seeing as the benefit of trading in that share.
Exactly, and where the value is to be derived. Langa, there is no denying that the discount is a big part of the appeal for shareholders and investors where it does exist. But let's unpack that a bit. What determines the extent of the discount? Catering for lack of liquidity that you've been quite emphatic about stands front and center, right?
Yeah. Well, primarily, it's a liquidity discount, really, when you look at it. The fact that there is a subset of the universe out of all the market participants that can exchange these shares, so buy and sell. So that liquidity restriction in itself give rise to that discount. But parallel to that, because of that discount, what we observe to the point just mentioned now is that those shares also tend to have a higher dividend yield because they have to compensate for the liquidity discount. But really, that's what is there. Other than just BE shares, the phenomenon of a liquidity discount is also a phenomenon of typically all small caps shares, whether BE or not. If you look in the BOWs at the exchange and you look at the small caps, you would find that there is liquidity constraint there, because let me make it just a kind of outrageous example, if I may say. If a share price is worth 1 cent and you want to buy it, or you want to sell it and you want to improve the price, you have to improve the price by 100% to 2 cents. So that's quite a very big spread to cross. So that's just at a high level some of the technical mechanics that are kind of causing liquidity constraints from shares. But specifically for BE shares, largely it's a restriction that comes in with most of the schemes.
Okay, so we've got the discount accounting for the lack of liquidity on the one hand with these shares, but we've also got the discount shielding, Craig, against risk from any kind of funding structure or funding arrangements that sits within the shares itself. So how do you go about assessing the fair value of a share that's offered via a BEE share scheme?
Yeah, so you would value it like a typical holding company, where you've got the listed entity. Let's say, for example, it's Yebo Yetu. Yebo Yetu owns a certain number. It owns 52 million Vodacom shares. So you can go to the JSE, you can get a spot price for Vodacom, and that times the 52 million will give you the value of the asset that's being held. From that, you would deduct the liabilities that Yebo Yetu owes. So this is the debt funding that it raised when the deal was struck. And you would then subtract the two, divide by the number of Yebo Yetu shares in issue to get a net asset value per share. You should apply, and we typically apply a 30% discount to the net asset value. And that for us is a fair value. And then we would then compare the fair value to the spot price to see is it trading at a discount to fair value or a premium to fair value, what's the discount, and now we can start seeing, is this an attractive share or not. If you look at shares like Ukamba, which is invested in Motus, it's 50% discount. Sol BE, which has no funding. Putumanati, there's no funding in the deal anymore. Those are also trading at pretty elevated discounts. So that's where we see opportunity.
Yeah.
Because those discounts tend to unwind fairly slowly and over time.
Yeah.
And as you have sessions like this and people become aware of it, and I was very excited about the news of centralized verification, because that's the single biggest complaint and the single biggest hurdle.
The fact that it's so onerous to jump in and out.
It is completely onerous. I could use some strong language now. But that's one of the hurdles, and I think that should remove some discount.
Yeah.
Because more people will be able to come in and participate, because people have given up as a result of the admin process.
Yes, absolutely.
So
no one wants to be tangled in any red tape. Langa, the theory is that over time, these shares should track the underlying, provided there aren't any scares on the debt side or the funding side if they exist. How much of a spanner in the works does the current rising interest rate environment throw for those schemes that do have a funding side to consider? Because if you've got interest rates skyrocketing, that could cause quite a bit of a disconnect, right, as the cost of funding rises, eating into the potential value.
No, yeah, absolutely. So it's twofold. So the rising interest rate environment present a challenge in terms of being able to pay the debt faster, because as when the gap between the interest rate, prevailing interest rate, and the yield that the share is paying closes in, it becomes much difficult really for the share to declare the dividends that are sufficient to cover capital. So that's one. But to Craig's point on the math side of things, that interest rate, if you apply it as a discount, it is implied in the calculations, because these are the future cash flows that you are taking a view on. If you want to understand what are these future cash flows are today, we have to use that interest rate to discount them to understand the value today. So that also discount the BEE share price even further. But what is important and what we will hope for is that investors are in it for the long term, that they are not just punting, taking a speculative view, because that's very difficult to do. There is no one who really can time the market. We all know this. So over time, as we get in and out of interest rate cycle, global growth cycle, some of these companies, for example, Sasol is an international company deriving earnings from all parts of the world. That over time tends to come in the numbers.
Yeah. We've put in the spotlight here the shareholder, the investors, perspective, or we've gotten a perspective on what this all means for the shareholder, the investor. Let's get some company perspective for a bit, Michelle, because you highlighted that Solbi 1 is a purely discounted share. Kanyisa sits on the opposite side. There's a funding consideration to keep in mind there. How much value has Sasol as a company derived from, introducing these BEE schemes under its ambit?
Of benefit, maybe you want to explain to me what kind of benefit you're talking about. We, of course, are very, very passionate about opening up the market and about transformation. And that is why the Sasol BE ordinary share was so important for us to actually create an evergreen empowerment leg.
And that's exactly what I meant, Michelle, in terms of bringing investors into the fray and, opening up exposure to those that were previously disadvantaged, and how that helps you hit some of your empowerment targets at Sasol.
Of course, it's extremely important. We are legally obliged to comply with BE codes, but it is also, just in a South African context, it is our license to operate, to be seen as a truly transformed company, and that our shareholder base reflects that as well. What is really encouraging is to see if you attend our annual general meetings, is to see how our annual general meetings have changed and how our shareholder base, investors are interested in attending and participating in the meetings. We used to have a Sasol AGM that lasted under half an hour. Now it goes on for 3 hours. And apart from, of course, decarbonization, which is a big ticket item for Sasol, it is about investors being interested in their investment. What is also encouraging is that is the education part of it. As investors become more comfortable with attending AGMs, they become savvy about investing. We try and conduct training sessions at our AGMs, and in time, I think the investors will grow. It is important what Langa mentioned earlier. It's not all investors that should be in equity, but it is certainly an important part of empowerment.
Craig, for the longest while, there were questions around if ever we were going to see Sasol issue dividends again. And then when it was apparent that it would, it got extended to, the BEE shareholders equally. But are dividends typically paid for these schemes? How do you assess that, and what kind of yields are we looking at?
Yes, so Sasol stopped paying dividends for a few years, and that affected all Sasol shareholders. Sol BE1 has been paying dividends from the get-go because it was a discounted scheme, and they ranked pari passu with Sol shareholders. So when Sol shareholders got paid, Sol BE1 shareholders got paid the same dividend. So at the moment, Putumanati is still the king of the dividend payers. That yield is sitting well north of kind of 16, 17% pre-dividend withholdings tax. Sol BE has made a comeback with the recent dividend, but that's the impact of the discount.
Yeah.
So I think it's just over an 8.5% yield. And you've got the likes of under the radar, Ukamba, which is invested in Motus, also just over an 8% yield.
I asked the question because a viewer has written in asking, what's your view on the old Mutual Bulatsela scheme? And you've given us that already, but part two to the question, any potential share growth or dividends in future from this scheme?
Yes, look, Old Mutual does pay a dividend. Old Mutual suspended dividends in 2008 and the beginning of the crisis, the COVID crisis. They suspended the interim dividend. It does pay dividends. The way the deal is structured, there should be between 4 and 6 Old Mutual shares per Bulatsela share, which means that Old Mutual doesn't have to declare a very high dividend for Bulatsela to be able to, service the debt.
Okay.
So that's what I meant by this. There's a bit of value baked in there.
Yeah.
To come back to the original question, Yebo Yetu has been a consistent dividend payer. MTN have chosen the path of applying the full dividend to settle debt. And will only start paying dividends at the end. So, this makes these shares attractive to different types of investors. So your younger investors can go for the highly geared, low income type options. And you've got your retired investors, your older investors that need income that can start looking at Sol BE, Putumanati, maybe Ukamba, where they're getting higher than market income from those shares and a diversified portfolio.
Absolutely.
As well.
So the important considerations to keep in mind here, Langa, one would think that all investors jump at the opportunity to cash in on those dividends. Yet there was a recent headline that caused quite a bit of a stir, 90 billion rand in unclaimed dividends. That's a very big problem because investors aren't then deriving full benefit of being exposed to these schemes. What's that being attributed to? I mean, how are we losing shareholders? That's what they're called, right? Lost shareholders.
Yeah, it's a combination of things, and Carol touched on it earlier on. So at a practical level, people change jobs, move provinces. They do not update the details, and there isn't really a centralized system for issuers to really track them. And particularly when it comes to BEE share schemes, it's incredibly difficult because you cannot get out, or if you want to get out, you have to sell it to another qualifying investor, which makes things difficult. But also recall, Alishia, we come from a history of mine workers in South Africa, and most of them, when BEE started off, particularly in the mining companies, were issued with employee share schemes. Some of them vested in their hands. Now, I'm talking broadly, not just BEE share schemes, broadly those share schemes. And oftentimes, people retire in the mining industry, they go back home. So it's a combination of all of these things that have accumulated over time. But I think really the good news is that we have a solution now we know who those investors are. And most importantly, it's no longer the job of the financial advisor of the issuer. Carroll Solution puts the power back to the investor to be able to update information as and when they change.
Exactly.
So we are hoping that over time, this problem is going to be reduced.
And a question that just popped in, what's being done to track all these lost shareholders? So how do you go back? I know the solution is here now, but how do you solve for that?
Well, it's a number of things. One, from a government point of view, I know that the FISCA is considering a more institutionalized process of tracking that back. From our side, is that, as Carol has mentioned here, the GIS is not starting from scratch.
Yeah.
There is already a base of registered shareholders that we are starting from. And as and when we get the new shareholders going forward, we think that we'll be able to keep pace and make sure that the records are kept up to date.
Michelle, just to bring you in here, I mean, what's your experience been of this lost shareholder at Sasol, you know, no matter which of the schemes that we're looking at?
It is a huge problem, and updating of information is a huge problem. At the moment, we have more than 4 million rand outstanding unclaimed dividends from 342,000 of the 6.3 million shareholders, and that is Sasol BE ordinary shares. The biggest problem is around changing of details, change of cell phones. People do change their cell phone numbers and contracts quite often. And we have found that a cell phone is the most efficient way of communicating with our shareholders. We are now able to even send annual notices of annual general meeting via WhatsApp. So it is actually quite a fantastic medium. There are really very few people in this country who do not have cell phones, but that is the big problem. They change their cell phones. They also change bank account numbers. And as soon as the bank account has changed, the dividend bounces as well. What is possible is data mining. Langa referred to new shareholders joining, but we are able to, through various processes, data mine and try and match shareholders to their dividends in that way. The only other alternative is debt collectors, tracing agents, that kind of thing, and it's just not successful.
Okay. Craig, the FSCA published a discussion paper recently proposing that those unclaimed benefits across the financial services industry be moved to a single fund and that the proceeds there be invested in social development projects. So what are we looking at and how much risk does that potentially present for shareholders, if at all? Because we aren't necessarily looking at a forfeiture of assets, right?
Yeah. It's an interesting and quite contentious proposal, and it's not unique to the share space. It's also, you see that in the retirement fund space as well, where you've got large amounts of money sitting in unclaimed funds sitting in retirement funds, and the administrators are having challenges locating the rightful owners of those funds. I don't have any kind of firm ideas on, it makes sense that if you've got this capital lying around and we're a country in desperate need of capital, particularly for infrastructure investment, it makes sense to apply that capital, generate some kind of return, which hopefully then goes back to the shareholders, so that at least while the funds are sitting around waiting to be claimed, that there's some kind of return being generated and a benefit for the broader economy. So it makes sense, but it's the detail that's often the challenge here. And,
exactly.
So South Africa, we haven't covered ourselves in glory in terms of managing other people's monies at
And
on
I
some
guess that's
occasions,
what
yeah.
triggers all of the unease, right? So we'll get to that and cross that bridge, I guess, when we get there. More clarity still to emerge. Let's talk trading these assets beyond the typical mandatory lock-in period. What kind of trading activity have you noted? Because the markets have been selling off. One assumes that BE shares would get caught up in that as well. But if it is so onerous, if it is such a problem, if liquidity is such a challenge, are we necessarily seeing the same kind of activity?
Yeah, so I'm sure you could get the exact numbers from the JSE. I think 100 million out of the 7 billion market cap gives a sense that it's reasonably low levels of trading. If I look, Phuthuma Nathi seems to trade quite well, but Phuthuma Nathi have a fairly aggressive investor education approach. So our company has been on the road with Phuthuma Nathi over the years, and we've done investor education, and very importantly, in the home languages of the various locations that we went to. So isiZulu in KZN, isiXhosa in the Eastern Cape, where we were able to speak to investors in their own language and help them understand some of these very technical issues when it comes to trading their shares. We've done so with Yebo Yetu as well, and with SA Breweries, the Zenzele Kabili deal. So we find that where there is that investor education, you find a lot of, not a lot, but you'd find a bit more trading because the investors are empowered. Share trading is not something that in the general population that's well understood. It's even more difficult where you have first generation investors and engaging in very technical language that's not their language and kind of highly regulated processes. So I think a big part of the challenge is, the likes of Phuthuma Nathi and Yebo Yetu spending a lot more time on the education side, spending to get people to understand in their own language, and just giving them access to people who are not kind of connected to the scheme, that can give perhaps a bit of broader advice and understanding.
And education is such an important element here, Langa. I mean, a viewer saying the SAB AB InBev first BEE scheme did very well. Is this the norm of a BEE deal, or is there also a likelihood of losing money as investor? We've had a few examples of lost investments here. So let's clarify that a bit, because, as much as we're empowering, as much as this comes at a discount, there's the other side of the equation to keep in mind as well.
No, absolutely. I would say that the first correct assumption to have or mindset is that the share price can go to zero. It's mathematically possible, so you could lose money, but generally over time, when you look at the markets, is that they tend to go up. And the important part, I think, I would just speak generally from a retail investment trading point of view, and how that is important for capital markets, because I think this is an underappreciated fact. In 2001, 2021 rather, January, when we had that meme stock frenzy in the US, where you found Wall Street aristocrats, really the hedge funds, investment banks, cornered by retail investors, because they had short a share, so that sold it without having it, in the hope that it will fall, they'll go buy it and sell it and profit from that. But retail investors actually came in and saved that share. It was GameStop, that's one of the phenomenons, and drove the price quite high. That's one story that tends to be much spoken about. What I found completely fascinating and for me really illuminating is a case study done in Australia, where over that period, it was found that retail investors were net buyers when the institutions were net sellers. So you could see that a well-informed, well-educated retail investor is good because they were buying when the markets were falling.
Yeah.
If everybody in the market was kind of selling, you kind of amplify the losses for everyone. So retail investors are good for the markets, for the efficiency of the market. They're good for liquidity because they tend to act as a counter force to what the institutions tend to do. But it all really rests in having investor education and having people understand that I shouldn't run away from my trading scheme simply because it's red everywhere.
Yeah.
There may be opportunities there. But the other important part, and we should always emphasize this, is that investment is a completely different thing from trading. If you are investing, you are taking a view. Implicitly, you are taking a long-term view. Whereas when you are trading, there are some participants who simply profit from sub-seconds price movement. They just want to make a profit. When a price changes from 1 second to the other, I buy and I sell it in the next
Exactly,
second.
and that's where the speculative element of it creeps in,
yeah,
right?
absolutely, yeah.
Okay, so Michelle, if we're running with this theme of education, right, let's just distill this and take it to basics for a moment. How should one evaluate whether or not to sell a BEE share? And I know this is a very personal question. It's very, based on the individual, what your investment goals are at the end of the day. But are there any points to keep in mind?
Oh, I'm not a financial advisor, but my
Disclaimer
point
noted,
is
but
that,
let's venture a guess anyway.
I think it's as Langa said, a B share scheme, I think, is for the long term. We've been asking our investors to be very patient. I understand that from a Sasol perspective. And I think that is the important part of it, is that if you want to make money quickly and you want cash out, if that is your objective of investing, then it's not a share that you should be investing in. You should see this for the long term.
Yeah. Okay, got you. Craig, you've got something to add there?
Yeah. So we've seen in the last year, you spoke about Zenzele Kabili. When they listed end of May last year, that share price ran quite hard.
Yeah.
And in fact, it traded at a significant premium, not only to fair value, but also to net asset value. And in fact, it got to a point where, as a black investor, you were better off buying AB InBev than buying the share, the BEE share. So that's one clear place. In fact, I've done it myself. Sol BE's briefly traded at a premium to Sasol during the COVID crash as well. So there were opportunities there where the BEE share is now at a premium, and when you do the maths, you're better off buying the underlying.
Yeah.
It happened to MTN, it's happened with Sol B, it's happened with Zenzele, it's happened with Ukamba. So these opportunities do arise, so you've got to be kind of in tune. And I think just a point on Zenzele, because there was a headline last year saying that you turned 100 Rand into 77,000 Rand. And that headline did so much damage.
Yeah.
Because if you had just looked at how Zenzele was structured, it was designed to favor the person who could only afford 100 Rand. It doesn't mean that if you put in 1,000 Rand, you got 770,000. In fact, if you put in 1,000 Rand, you got maybe double the 77,000. But people were just extrapolating this headline. And the net result was that Zenzele Kabili came in and went from 60 Rand net asset value to 180 Rand, which is 3 times the premium. So these headlines do distort the market a bit, and it links back to the education angle that we were speaking about.
Absolutely. And a question that's come in is, like, can you comment on the lock-in period? Because if this is the case, and if you should be nimble and aware of your environment, why do BEE share schemes have such long lock-in periods before we can trade? Are these being used as golden handcuffs?
Look, I think maybe Michelle can comment to that. But I think the lock-in period, it's nothing new in investment markets. People have been buying 10-year endowments since forever and a day, so where you locked in for 10 years or 5-year endowment. But the lock-in period to us makes sense because there's very little value in those shares in the beginning because the debt often crowds out a lot of that value. So, you know, you'd be trading kind of shares worth R1, R2. There's not a lot of value baked in. But I think it also gives the scheme time to settle, generate cash, and start servicing the debt and create value. And I think it's protected investors more so than anything else. It puts the onus back on the investor to say, can I afford to have this money tied up for 5 years? If I can't, then I shouldn't participate in Bullet Seller, for example, or any other fixed deposit that's giving a 12% return but takes my money for 5 years.
Absolutely.
You know, so it's the investor's onus to understand if this is an appropriate investment.
And Michelle, I'm going to come to you in a bit, but before I do, Langa, this was a conversation that we were having before we actually came online, because if you're looking at these schemes to educate, to bring, players into the financial arena, you don't want them getting caught in speculative activity to start off with.
No, absolutely. We as an exchange, obviously, we are a platform. We match buyers and sellers. So we are pretty much agnostic about investors' decisions. But when we take a broader view from building the market to the point Craig had about many of people being first-time investors, we will take a view that we should encourage and build a mindset that says, I'm in it for the long term. One of the things that get lost is the reason why stock exchanges were established in the first place. Stock exchanges weren't necessarily established in the first place for speculative purposes. The oldest stock exchange in Amsterdam, I think it's now 400 years old, was about financing shipment of the Dust East India Company. And if you think about capital that was needed and the journey that those ships will take before you come back and realize your investment was quite long. Today, companies require permanent capital. It's not capital that you should give to Sasol today, tomorrow you want it back, because they are expanding, running projects and growing the business. So inherently, when you are getting into investing in companies that are listed, you are actually saying to a company, I'm offering you permanent capital in return for growth in the share price and in return for income in the form of dividends. I think this is an approach that will encourage from a mindset point of view.
Yeah. Michelle, let's bring you in here to that question about why you're putting golden handcuffs on BEE shareholders.
Thanks. I think it's the math. If you shorten the period, you will need a higher upfront payment. And of course, it's about the cash generation of the business and the ability to pay down the debt over the term of the lock-in.
Yeah. Okay, Craig, we're going to get into now trading, because you said earlier on that you were encouraged by what you've heard about the extension that we're seeing in terms of ShareHub and what that's going to allow for, what that's going to facilitate. You had a few bad words to say about the experience up to this point. How much of the problems we've outlined up to this point when it comes to trading do you see something like this ShareHub facility solving for?
Yeah, I think it's an enormous obstacle, because if you go to MTN, you get one process, and you go to Yebo, you get another process. You go to Sasol, there's a different process. And people want to buy all three stocks, and, So we've advised plenty groups and stockvels and investors who wanted to get into these things and who simply gave up because of the admin,
Yeah.
not because the opportunity had bypassed them. It was just the intense admin load. And you get so many different ones, people are pulling their hair out. Because if I think of some of our clients, so I think of one of my clients who was quite senior, quite wealthy, saw the opportunity, eventually put all his money in the first deal that kind of sorted out his verification.
Yeah.
He said, we just put it there because from a time perspective, it wasn't worth his time
Yeah.
to now carry on with the others. So it is a huge problem, and I'm glad something's been done about it. And I think it will help narrow the discount.
Yeah, let's talk about that, because if that is solved for, that is something to bear in mind here, right? That we will see a narrowing of the discount of the shares offered.
I think we would, because by virtue of the fact that you've got more investors.
Yeah.
So, if you look at Solby one on any given day, there's a fairly wide spread between bids and offers. So if you've got more people coming into the market, some of them would be prepared to pay the higher price just to get some exposure and then maybe wait. But if you have more competition, so other shareholders coming in to buy those shares, then you'd find that those spreads would narrow quite meaningfully. And then existing investors also have more confidence to trade, because if they know they can get out quickly and get back in when their circumstances have changed, then you'd see a pickup in trade happening.
Yeah.
At the moment, they would try and sell some of their other investments where they don't have the liquidity issues.
Absolutely.
So, yeah.
Langa, are you anticipating quite a marked shift when it comes to trading activity?
Yeah, no, definitely we are, because the solution removes what I would say unnatural for markets constraints. The investment decisions should really be based on the actual market fundamentals or investors' views. It shouldn't be, it's too cumbersome for me to sell the share or to buy the share, because that's really exogenous to trading just the ecosystem. So that's one. Two, we intend to take it further as the JSE, the challenge around liquidity. One of the things that we are investigating and considering is incentivizing the stockbrokers, so the people who execute on behalf of the investors, so that they've got some incentives to provide liquidity in the market for the shares. One of the things we never really think about is that when you sell, there must be a buyer. When you buy, there must be a seller. And that role is not sufficiently there in these shares, partly because of the operational process that we've just spoken about. If a stockbroker has to spend an hour or two trying to verify 3 or 4 shareholders before he can execute, he's best using that time servicing other clients in the other segments of shares where he doesn't have to do that.
Yeah.
So the solution that we are talking about is the beginning of undoing that process, but we are not going to end there.
Okay.
Yeah.
Craig, what trading platform does the panel recommend? Are there options, and what are the pros and cons of each?
Okay, so you need to distinguish between the trading platform and a stockbroking account. So, for example, we hold our JSE BE board-listed shares via FNB Securities.
Okay.
So that's the trading account we use, and we can buy Solby and Sakele Footy and all of those. We can through that one account, Yebo Yetu. But then you've got the OTC board, so Easy, not Easy Equities, Easy, which is where Putumanati and Ukamba trade. Mm-hmm. And then I think ZARX has one listed company there. So depending on what you buy, you would then have to go to that respective board. To access the JSE BEE board, you need to find a stockbroker which offers the BEE contract and will facilitate access.
Okay.
And not all of them do.
Okay, I usually leave the last 10 minutes of the conversation for to address some of the questions from the audience and our viewers this morning, but I've been weaving them as the conversation progresses. So let's look at bottom line notes from you now, Michelle. How much value has the Sasol share scheme unlocked?
I think it has unlocked enormous value. We obviously achieved our BE credentials, but we also have a large number of new investors, and I think it's just huge untapped potential still out there. And I just want to add on to what Craig and Langa has said, and that is around having an inbuilt market maker on the JSE Empowerment Exchange to facilitate trades and improve liquidity. Then also what I've found is that we need the stockbrokers and the online stockbroking accounts to allow the BE shares to be traded in those as well, which would facilitate that. And then just from Sasol side, we've done away with the BE contract. We no longer require the BE contract, and that has smoothed things quite a bit around BE verification.
Okay, Langa, from your side, how much value are we seeing being made by these BEE schemes? The Busatsela empowerment deal follows a more than 7.9 billion rand of value created by Old Mutual scheme back in 2005. That deal or that scheme matured in 2015. What are we looking at now across the board?
Yeah. So not all the numbers are in yet, because most of the schemes have either just been refreshed or new versions of the schemes have just come in. So it's really too early to tell. But to your point, by about 2015, Intellidex actually has a report out there. I will encourage your viewers to find that report, The Value of BEE Deals, I think it's called, by Intellidex. It had found that by the end of 2015, about 250 billion of value had been created out of the BEE schemes that had vested and paid back the debt and paid and we are talking here net value, unencumbered, including payment of dividends over the course of that time. So if by 2015 we were talking about 250 billion, I would put that number north of that, that by the time the current schemes come to unwind, they would have created substantively more value than that figure.
Okay.
Yeah.
Before I put the final question to you, or you were going to say something?
No, I was just going to relay one anecdote. I went on the road with Putumanati several years ago, and a gentleman stood up during the investor education slot and basically told the story of how he invested in Putumanati when it listed, and this was about 2018. Putumanati had paid for his daughter to go through varsity, and he was quite emotional, because it was a relatively small investment, but the impact was massive, and those are the kind of things that that real value.
Yeah.
Because you throw a number like 250 billion around, well, what does that mean? But when you listen to a dad talking about the fact that it meant dignity, it meant the family is being able to move up because now the eldest daughter has gone through university, paid for by the share, the dividends from Putumanati. I think that's incredibly powerful.
Well, you inadvertently then answered my final question to you, because I was going to say, bottom line, can BEE shares create wealth? And that answer, I guess, summing it all up. It's been an absolute pleasure being with all of you this afternoon. So thanks so much for having joined us, ladies and gentlemen. We've come to the end of this hour session. It's been an absolute pleasure hosting all of you. Thanks to my guests for having joined us, Langa, Craig, Michelle as well. Very early in New York this morning, but you can get on with the rest of your day now. And to our viewers, thank you very much for your engagement. That's, of course, what makes this conversation happen. From me, Alishia Seckam, it's bye for now.